Morning, everyone, and welcome to this new sessions. We are here together with Scott Puccini and Fausto Pugliese from Cyber Trading University. So we're excited to have you guys here. I know Fausto, Scott put us in touch, and we were live on a podcast a few weeks ago. So we're excited to have you back on our podcast. So welcome, and welcome, Scott, as always.
Thanks for having me again.
Thanks for having me.
And before we get started, we're going to talk about how to use kind of option data for trading futures, and we're going to look at Bookmap. Maybe Fausto and Scott, if you guys want to just give a brief introduction for those who are not familiar and have not come across you guys.
Yeah, sure. So my name is Fausto Pugliese. I've been doing this for about 35 years, one of the original SOS bandits, which are the day traders. And I live here in New York and trained by some of the best traders in the industry. Was a prop trader, started a school back then. Eventually, we have started one of the first trading rooms in the industry. Been traveling around the world, been teaching people, trained over hundreds of thousands of traders over the years. I use a lot of the platforms like Fabio is using also, which we're going to talk about here, level 4, which is the Bookmap. And, basically, we do some swing trading, we do some day trading, mainly day trading, but swing trading and some options trading, and just basically just find stocks that are moving that are pretty volatile in today's markets, like today, and just try to focus on making a day's pay. So we have several hundred traders in our trading room, and like I said, we just trade with each other and basically day trade the market.
Cool. Glad to have you.
Yeah.
Yeah, and Scott, I don't know if you want to, I know you've been here many times, but maybe for those who are new, it would be great to have your introduction as well.
Yeah, Scott Puccini. And for those of you tuning in, this is not a mafia show with, it's nothing but Italians on this webinar. I've been trading for about 25 years, used to be a large scalper in the mini S&P, used to be 10% of the world volume every day. So how active I was, and got knocked out of the game around 2013, and then got back in the game around 2017, 2018, when I was introduced to this platform that is my driver of my trading, bookmap.com. And I use one of the main things that I use on this platform is the stop iceberg indicator, which is derived from the CME MBO enhanced data, which I'll go over here. And then, I've added things on top of it, especially with Fabio's options levels. But that's the core of my trading. And I'm a day trader as well. I have my own trade room. Got into more educating as well right around 2020. So I do that and trade live myself and teach people how to trade my method.
Nice. Yeah, and I think, so we're here today. I think you guys, it was a good connection because I think there's a lot of synergy here. And I think, Scott, you've been with us or kind of partnered with us for just over a year, using our levels together with your, obviously, iceberg strategy to provide potentially an additional edge. So maybe, Fausto, we want to see how are you finding an edge in the market, and how are you preparing for kind of at the end of the year? I know we have a few weeks left to Thanksgiving, but it's going to be a very interesting year. I think there's going to be a lot of volatility. So how are you guys kind of preparing, and what are the things that you're looking for?
Well, with today, the market is it's a little bit of a roller coaster. We're down like 160, we're almost down like 400. Some of the CEOs from banks are projecting a little bit of correction. They think a lot of these, high-tech stocks are a little overpriced right now. I'm still trading some of the fabulous sevens. We're focusing a little bit more, Fabio, on these high-yield stocks. So going into the end of the year, we're focused on a little bit more on the dividend stocks. They're pretty cheap right now. So if they hold right here, at least we're making some income on those. We're using the brand name stocks on Bookmap to kind of follow what those stocks are doing, and then more or less just trading more of the ETFs, and then basically work off the top 20 list. Today we had a couple of nice little runners. There was a couple of good stocks that made some nice moves. We had, Hertz that had a really nice move, HTZ. Nice pop. It's been doing really well. Had good earnings. CIFR was another good stock. Signed a multi-billion-dollar deal with Amazon. That stock's been on a big little move also. I know a lot of people are, wondering what happened with Palantir. They had earnings yesterday, but we have some pretty big iceberg orders hovering right around the 200 level and the 185. So, but mainly those are the two real stocks that we're focusing on, and more or less the high yield stocks, and just like I said, just work on dividends.
Nice. And and I think Scott, you wanted to also understand how do you use kind of like Bookmap, and what are the things that you leverage there? And I don't know if you came across also the kind of option levels that we have, and we can discuss that too.
Yeah, so the core of my trading when I got back in the business, just about 8 years ago now, 7, 8 years ago, when I was introduced to Bookmap, is one, the way this is shown on the heat map, the order flow, and looks like there's a lot in this chart. There is, but it's not that complicated. I'll go over it. But the bottom line is what you're seeing on the heat map, this order book. Like right now, you can see these algos playing games in here, right? So the minute I saw this, actually the guy that introduced me to the Bookmap was Dr. Brett Steenbarger. He's one of the top trading psychologists in the world now. But he sat behind me when he wrote his book, Enhancing Trader Performance. He wanted to see, at the time when I was the large scalper making millions of dollars, he wanted to see what made me unique and elite. So he sat behind me. So he kind of knew my method of trading as far as how I visualize the market. So he came to me 2018. He knew I wasn't even trading at that point because I got knocked out of the business by the algos and the low volatility at the time, back in 2005. But he knew I wasn't trading for probably 6-7 years. And he came to me and said, "Hey, you want to check out this platform Bookmap?" He's like, "It reminds me when I sat behind you how I used to visualize the market." So the minute I saw this, the way this is outlaid with the liquidity, meaning just the orders in the order book, and just the market order bubbles, and it just gave me a different perspective of the market and how I needed to watch it. Because watching this order book is not, you trying to trade off the dome, the depth of market nowadays. It's impossible because again, these algos are so fast. I used to be one of the fastest mouse clickers in the world, and I wasn't fast enough to compete with these computers. So watching this is it's futile. Like it's just not possible to trade off of this, especially being as a retail trader now, and any retail trader that's trying to trade off of this, the commissions will even if you do have successful, even if you do have some savant ability to be able to watch these orders and make something of it, you're gonna wear yourself down to the nub with these commissions that are coming through. So, or that's your account trying to trade this. So, by using this Bookmap, it's enabled me to see the orders in a different light. And then a couple of years after using this, Bruce from Bookmap came to me and said, "Hey, you want to check out this MBO data from the CME?" So the CME came out around 2017 with this enhanced data that shows with 100% certainty where the stop runs are. So you can see this is the activity that's drawn. It's on the subchart that the Bookmap developers figured out a way to disseminate this information from the CME. And then we have a zone drawing tool that shows it on the heat map as well. But the primary the two things that this shows are icebergs, which are hidden orders by the big money because they don't want to put big orders in the order book because these algos will run the market away from them and they have to chase it. So there's icebergs and stop runs. Stop runs are usually retail traders puking out of position. So that in itself is information where, if you're watching a specific level like you saw up here, we'll go over this. You had two of your method Q levels here, and then I see pukes that are not represented by usually real buying, initiative buying. It's just guys getting out of position. So I know already that in this case that the options dealers may be hedging here, and then you add in what I've been watching for 8 years now, these stop run and iceberg data. It just gives you really good areas to put on your trades. So again, I have multiple important areas that I watch, but I wait for a driver, meaning these SI events, to enter my trades and the rules behind them. So it's the best edge I've ever seen in my 25 years of trading, and it's the driver of everything I do as far as waiting for important areas and putting on trades. So it's pretty incredible stuff. I did want to ask Fausto, how are you seeing icebergs on the stocks? Because I know they don't have that information. I know that they have the synthetic where you can kind of pick it up, but they don't have anything like the CME MBO data, do they, for stock?
Well, like on my book map, mine looks a little bit different than yours. I don't have as many indicators that you're using. I kind of just work on the current order book on the right, and then you have those heat lines that come across on the heat map. And what's nice about it, you could see if they, if they canceled, if they still out there. Like for example, Hertz had a big iceberg order, a big block order that was hovering right around $7 for about 100,000 shares, and just an hour, just a little bit past 11:30, that order got filled. So you won't see them on the current order book. So I'm kind of just working with those simple lines and the darker lines and having them, colored pretty heavily due to them getting filled or not. So. And then I kind of use the bubbles as the time in sales to know if those transactions are getting filled or not. So, sometimes people will they call spoofing. I call them just fake outs. Maybe some people putting fake orders, not fake, they're real orders, but you'll know if they're getting executed, if they're just limit orders or whatever. But I kind of just work with just the bubbles and the current order book and the heat lines.
Right. Cool. Yeah, so that's what I'm doing as far as my areas, and then I was introduced to, Fabio when he does his webinars, he's showing the explosion in options activities, right? So that is so important to understand nowadays, how the zero date to expiration game has exploded, and you need to know in these markets, these futures markets, especially the equity markets, where these dealers are loaded up, where they're going to be hedging their positions, because they get the newest game in town, the newest manipulation game in town, and there's always a new one every few years, is to the zero date to expiration, the options that are expiring today. They love to load up the dealers, and then the dealers have to turn around and hedge in the futures, right? So you need to know where these areas are. These are the prior day, but Fabio has real-time stuff too, where you can see where the dealers are getting loaded up, and they're going to be reacting at that area. So again, I knew of the options, but the options game wasn't that big of a deal back in the day when I was trading. Now it's huge. So you need to know where these levels are, and how the market reacts to them and the dealers react to them when it gets up here. So I've implemented, and that's another thing with trading too. You always got to be ready to adapt your trading, right? Like, especially when stuff's not working anymore. And I'm not talking like flipping from strategy to strategy on a whim, but if you're trading something for years and all of a sudden you're going 6 months, a year, and it's not working as well, you got to be ready to make adjustments to what you're doing. And I've adapted using these GEX levels because I just watch them work all day, every day. And when with the prevalence of these the options game now, you need to know where these areas are. So one of my main trades now is looking for these volume events, these stop iceberg events. So that this was earlier at NASDAQ, and we took this on my webinar, my live trading webinar this morning, where I knew this was an important area. Not only GEX levels, this was a couple other areas that I look at, but in this case, it was a GEX level where you could have just said, okay, here's put support, which it barreled through in the morning and then came back here. So anything in trading, right, that's support, once it breaks, it's now resistance. Well, this was the first test back up here since overnight. And then, so the dealers are going to be reacting here when it comes back up here. And then we had the iceberg event. So this was a perfect opportunity to know your area as far as options and say, okay, I'm going to give this a shot with this stop iceberg activity, which I did. So I have a term for one of my trades. It's called the sexy Gexy, where I'm trading right when I get the volume event into these GEX levels. I didn't take that in this case, but I did take a couple other trades. There was so these are my areas that I look for these trades, and I was talking on my webinar how I couldn't wait for a move back. So they did the sneak attack overnight, and I couldn't wait for a move back into these zones. These are the zones I draw. These are inflection zones. These are just drawn on the 4 important areas of trading: tops and bottoms of balance areas, high volume nodes of balance areas, buying and selling tails, directional conviction. So I draw these every morning for my trade room. So this is just another example of me having an important area and waiting for a stop iceberg event. So the market came back up here. I knew that was an inflection zone. We call it an IZZY zone. I knew there were GEX levels here. I knew this was a Dumb and Dumber, one of my 6 distinct stop iceberg events I look for, where it's usually the dumb money puking out. It's not initiative buying. It usually fails more often than not. And then we had one other thing that I used too. These are called Ludwig levels. These things are incredible. Probably the second most powerful thing I've ever seen in my trading career. But you had a stop run into the major lug that helped too. So this is just another example. Like, these things are incredibly powerful in their own right, but I won't take trades off of them blindly. I need to see the iceberg event. In this case, I got the iceberg event. So, and anything in trading, confluence is really important, meaning the more things you have there, the better the probabilities. And that's all trading is probabilities, right? So we had 2 GEX levels. We had the Ludwig level. We had an ISI zone and a stop run that usually is not initiative buying. So that initiated this short, which I'm still in. So you can see real time, like how this stuff, all comes together.
Yeah, I like that order you have. What time is that? 9 o'clock. You had a big red bar. Is that right there?
Which one right here?
Yeah, go up, and right there you have that big red line right there. Yeah, that's a big order.
Oh, right here. Yeah. Well, they pulled that. Yeah. But
Yeah.
this liquidity. Yeah. I just actually turned this down a little bit. But yeah. So that's the other thing you can really tell. So with these markets, even without the stop iceberg information, this was the first thing that I started looking at was this heavy resting liquidity. So for instance, I got short gold here this morning. Same type of thing where you can see all these GEX levels that held. And let's see, where was the trade here? I think it was this guy here. No. Thought it was up higher here. I was short gold. I guess it was this guy. But anyway, yeah, it was here. So I got short gold here earlier, and I was watching these bands of heavy resting liquidity. So first of all, the longer it's been in there, the more likely it is for these things to get filled. Why? Because this is the big money. The big money gets their way most of the time, right? So they want their fill. So the longer it's in there, it means they're not playing games like you see over here, how they're putting in and pulling it. It's just sitting in here, meaning if something comes out, they're willing to get filled. So that's how you know they want their fills. It's not a game where the market comes down here and they yank it type of thing many of the times, right? So the longer it's been in here, the more important it is, and the more likely it is to get drilled, right? So you can see here, I got short this market, and then as it came down on these levels and started struggling, I got out a little there, I got out a little there, and you can see it came all the way down, filled all this liquidity, right? All the resting orders, because these guys always get their way. And again, what my trading is based on my experience as a large scalper back in the day, right? So I used to play this exact game where I would load up the order book and then I would push the market into my orders. So they're doing the same thing nowadays, right? So all this stuff sitting here, and it's not a coincidence. Some of this is probably dealer activity too. You can see they're right on these GEX levels, right? So that gives you even more information when this liquidity is right on the GEX levels. But the point is, the market filled all these liquidity levels and then turn around and reverse. So just knowing the liquidity levels, and I'm not even talking about the stop iceberg information, just knowing these levels is a huge edge in its own right.
Yeah, I mean, I could show you, if I could share my screen, I'll show you exactly mine, almost a little bit what you're looking at. Will I be able to do that, Fabio?
Yeah, sure. If you can share it, I'll put it on.
Yeah, let me bring it up here. So yeah, so right here, this is Hertz that had a nice little move. I had earnings announcements coming this morning. You could see right here at 9:30, started making a nice little move. There was an order that showed up here. This order got filled, and those green little balls mean those big transactions got filled. And then this order showed up right around here. He's still out there for 610 for 110,000. This person canceled. This person got filled. And then it went all the way up to this $7 price range around 10.15. And you could see this is called consolidation. And then as the line got brighter, that means someone kept adding more and more to the shares, and it's been having a tough time. Now, what's very attractive about the stock is that there's this big green ball right here. That big order right there was, if I move over here a little bit, was about 104,000. And you can see he did get executed. Now somebody just upticked here at 410. So a lot of resistance levels here on that 410 at that $7. And let me just bring up here HTZ and bring up an intraday chart. So here's Hertz, and you could see here how it's been having a very tough time with his resistance levels right around here. And if you look here on the long-term chart at $7, You could see back here in September, a lot of resistance levels, support levels around here in July. You got resistance levels here back in May. You get some what we call 7-ish, which means a little bit more if it does break it. But that's one of the reasons that's moving. One really nice stock that we did well on this morning was this stock, CIFL. I was just telling you earlier. This one was pretty cool. Let me show you what happened here for some of you here. So we had what's called a ladder effect on this thing right here. Pretty cool. See your orders out here. So right around, what time was this? 9:40. Stock started this morning. Big buyers showed up around 20, and then somebody laddered up here at 460. Then he laddered up again. He laddered up again. So he wasn't getting filled. And when you see these orders out here on Bookmap, someone was trying to buy it, and he didn't get filled, and he kept upticking. And that's what happened. He uptick again, and that's why we took a stock that went from like 940 all the way up to about 10 o'clock, shot from $20.60 all the way up to $23. So this big seller showed up, and he did get filled. But as of right now, he's kind of like, this is called a slingshot. So he basically hit it, but he came back out a little bit more, and that's why I drove the stock down. And another seller came out. Not that many shares, only 22,000. I thought it was going to break it. You could see there's a big seller out here for 147,000 at $28. But I thought it was going to break it, but it never did. But if it does get past this 23, you can see the stock is moving in 50-cent intervals. So the more you scroll down to see further, the bigger the numbers, and the other ones will disappear, and these will get lighter. So we kind of just keep it a little bit more simple on the chart, on the Bookmap, just following these, what we call these big iceberg orders over here on the right. There was also a couple other good ones too out there. So today, obviously, the market's taking a little bit of a hit. Here's Tesla. For some of you who here chase Tesla. So there's been a big order out here that was here early this morning. We had a nice little slingshot. It went back up to 60. But you're getting a list of these orders out here, right around here at 450, 445, 440. So they're kind of holding here pretty strong. 460 has been a major resistance levels on the long term on Tesla. So let me just bring up Tesla here on the chart. It's one of the stocks we own here at Cybertrade University. So you could see here, big resistance levels here at 460. That's the intraday chart. And we look here on the long-term chart, you'll see right around here, a little bit of resistance levels right around here around 460. So we're still bullish on these stocks. And by the way, you don't have to trade Tesla. I don't know if anybody here knows this, but there's a ton of ETFs on Tesla. There's TSLY, which is the high yield that we trade. TSLL, which is the double ETF on it. There's TSYY. So there's a lot of these ETFs that we're trading with them and making on the dividend. But we trade them by watching the stock, and if they hold here, I think we still look pretty good. So we've been big fans of these stocks still, but that's what we kind of like working over here on the following those big orders.
And if I can add to that, like if I can show you, Fausto, also that those levels are actually big option levels that you see there. Right. So these 460 and 450 here. So you see how Tesla kind of moved into these areas. So I think integrating all of that together can give you like a lot of good insights as well.
Well, Scott, to ask you're a market maker on the options side. Those orders that we see out there, aren't they backed up to cover the options?
Well, it depends. I wasn't an options trader. I was a futures trader, but
futures.
But yeah, I mean, they're not always options levels, but I just showed, a couple instances where the gold, like they were all on the options level. So yeah, I'm sure some of the options dealers have some resting orders there. I think it's more big money versus options dealers many of the times, but yeah. But I mean, this is a perfect example. Like for instance, his X2 is where it bounced off of twice today is at 460. What does your liquidity look like on your Bookmap, Fausto?
On Tesla?
Yeah, do you have that liquidity right there at that 460?
Yeah, you have that liquidity, but it's not that much. It's only around 39,000. And remember, we're not seeing the total book. This is only showing you NASDAQ and EDGX. I mean, there's other ECNs out there. There's ARCA, there's a bunch of them. But for what we can see here, I mean, it's not a big number as much as I like. The big number is right here, 480 and 475. Got 130,000, 100,000. But there's that little liquidity right here. It's only like 39,000.
But for example of that is, if you're going long Tesla for your strategies, and then you see, we got through. I probably wants to show us GEX levels again. Like we got through that GEX 5, and you can say, using your stuff with the liquidity, and then the GEX level is like, okay, next target up is the GEX 2. So that helped. So that was a good example too. There's not a lot of liquidity there, but the dealers are still going to be hedging there, right? So my question for Fabio is, what, in your experience, what do dealers rest orders, or do they wait for the market to get there and then start hedging with market orders more? Fabio, that question is actually for him. I mean, if you know, that's fine too. I thought he would know because he's been in that space. Do you trade options, Fausto, or no?
Very little. Very little. We do trade options in our room, but I mainly like to strictly trade the stock.
Yeah. So, in your experience, how do they hedge there? So do they just rest them, or do they wait for the market to get there and then they go to the market?
So I think
Go ahead, Fabio.
No, you go ahead. Sorry.
Well, they actually would. See, the problem that people understand is you don't know who that person is, right? And you don't know what his game plan is. So could he be hedging? I mean, you know what? He'd probably be covering a short. You don't know that. So they do hedge themselves. It depends on how it consolidates. So it did consolidate here for a little bit. As the longer it trades it, the more it consolidates. But this is called a higher low. So I think you're right. Like I think he basically hedged himself on the downside.
And Fabio, what's your experience with that?
For me, it's more like that these levels. So especially if we go back here, whenever we have a large amount of gamma, they typically become magnets, and they typically create a reaction, right? So here you have probably a lot of people that are buying or selling these weekly options on Tesla in this case. And basically, once we get to these areas, they become big reaction zones. So a lot of like option trader might be, if they sold puts at this area, might take profit, or if they sold call at this area, might take profit, and therefore the market makers would then hedge based on those levels. But they do create a strong reaction, and it all starts from kind of the amount of gamma that we see, and then of course we also have the weekly expiration there as well. So important to see, like for example, yesterday there was a very good use case that we were looking at on a different call on SPX, where the market kind of like bounced back this level. This was a very strong 0 DTE level for the day with a lot of gamma, and therefore we were, although we are in positive gamma for SPX, we were in negative gamma for this expiration yesterday. And basically, this was a put support area, and then drop down, boom, bounce all the way up. So the way I read it is I have a plan A and a plan B whenever we hit those JAX levels, and then I would basically adjust based on the price action that you see.
Right. And then I'll show you one other trade that I take too in my room that just shows these power of these GEX levels. Yeah, grab this back too. Do you have my screen, or did you just switch me, Fabio?
I think I had it. If you want to reshare it.
It's not letting me. Okay, here we go. Yeah, so the two different ways I trade these is I'll take trades into them if there's a volume event, and then I also have a trade, and that's what you're seeing here. All these lines on this chart is just reversion trades. So these markets have a ridiculous propensity regularity to come back to these volume events, right? And it's just based on normal market movement, where especially like if like if the big money's caught and the market moves away, this is all based on what I used to do, right? So say I would sell here, say this was sell ice at the time, or just say this was a big order that I put in back in the day where I would sell and the market would do this. Well, I would use any bullets I had left to try to push it back to my area because I was clearly wrong on that call selling right here. So any bullets I would have left, I would push it back to that area that I got short and get the hell out of the trade, right? So that is the thinking behind these reversion trades, or it's the algos, whatever the reason is. I don't need to know the reason. I just need to know it does it, right? You're never going to know why things are happening in the market. A lot of times, all I know is these markets come back to these volume events with such ridiculous regularity. We actually have a trade based on that, right? So once again, you can see, so this buy iceberg came in here. This was in ES. Turn off this price change algo. Right, so this was this guy here. You had about 750, and then you had even more. So it moved out and came back, and someone else was buying this, and it did react higher. So you had about 1,300 buy ice contracts here. Well, the market, you could see, came up here, struggled at the HVL, got up here, got real close to GEX2, and there was multiple here, and then came back. So I took this trade off of this GEX level. My stop. This is what these lines are, right? So these dashed lines are the ATRs. So I like to take these ATRs. This is the 1 ATR, the 2, and the 3, and then this dashed dotted line are the stops for those. So I put on this trade at the time off of the GEX level. I call it the back in black, where it tags a GEX level and starts to come back to the zone, and then I get out. This is the closest thing to a scalp that I think is a viable way to trade if you want to scalp markets, right? Watching this and trying to trade off that is just like I said at the beginning of the webinar, you're wasting your time, in my opinion. And that's how I made millions of dollars, right? So I'm not saying if I can't do it, nobody can do it, but I'm telling you, I was one of the best in the world trading off of this. And it's not a viable way to trade nowadays. So anyway, I play the closest thing to a scalp I play are these reversions back to the events. And you can see this was just a perfect, we took a little heat, but I never got stopped out. You can see where my stop was up here, and it actually held this. And these are some of the best ones where I'm playing for a reaction off of this guy, but my stop is through that. I could even put it through another one. So for me to be wrong on this reversion trade, it has to go basically through, especially if I moved it up a little bit, it would have to go through 4 different GEX levels. So this is just called a high probability trade, right? So knowing these areas, knowing the dealers are going to be reacting here. So if I'm going to be wrong, it's got to get through all this dealer activity when it gets up here, and then I just play and I'm out at the zone. So this is another type of trade I take. Again, it's more of an in-out type of scalp trade. And then I also have the position trades where I'm taking for the bigger moves like we saw in gold and NASDAQ from this morning. So just, a way how I've adapted my trading to probably one of the biggest movers of markets is these options activities. So I want to thank Fabio. And what's great too about Mentor Q is there's a lot of these options companies popping up out there, but Mentor Q is one of the only ones, if not the only one, that has these GEX levels for all these different futures products, right? So very rarely are you going to know where these areas are, and you'll be shocked on how these markets react to these areas. And things like this is crude oil, right? And gold. I already talked about this. How this one failed up here, right? So it's like up at these levels here. So it's like knowing these areas. You have to know these. If you're going to trade futures and stocks, I think obviously you've got to know these areas because these dealers are huge participants in the underlying asset because they have to hedge themselves. So you want to know where the dealers are going to be hedging themselves to give you, the information, one, not only for targets and for areas where the market may stop.
Yeah.
Scott, where do you think with your, what you're looking at, because I own gold, right now, it's been on a little bit of a downtrend. What are you seeing where it looks like it's going?
Yeah, well, the big thing I use from my thesis every day, and the thesis is just a complete guess. It's, it's an educated guess. It's a thesis, right? So I use market structure, right? So you can see this morning, this broke down from this balance area. Balance area is just two-sided trade. Doesn't get more basic than that, right? What's two-sided trade? It's just traders placing bets, right? You got longs and you got shorts. You got longs, and the bigger the balance area, the more powerful it is. When it breaks out, that's where you get the big moves. So today, and it's all fractal too. So you had little balances inside of the bigger balance, but this was telling me something yesterday. For instance, this thing tried to break down out of this little guy, came back, held the high volume node. High volume node is just the middle of the balance area where the most trades transacted. That was telling you something where I couldn't get through there, and it came back. It was giving you a heads up that this might happen today. And then it broke down out of this guy, right? And you got that bigger move. So rule of thumb, usually when markets break out of balance, rule of thumb is the height of the balance is usually the move you're looking for. So this almost got there already, but you can see now things are changing. So things change. This broke down. You had a bunch of puking earlier. That's what's great about Bookmap. You can see the actual pukes, meaning the stop runs. Stop runs are traders puking out of positions, right? So there was one here earlier. That's the one I got short off of. And then you had one down here at the low where, and again, a great example of, well, there are two examples here where one, you had another one here, by the way, a huge puke there. You can't really see it because it's that was buy ice. So somebody came in here buying a big, and then he came in here buying with this with buy icebergs here. But you see there is a puke there. That's the red box. That's the stop run here. This was 600 contract puke. And then it came down to the low, another puke. This one wasn't as big. I don't know why this one's showing 150, but it was more than that. So this is a good example, though, how these icebergs aren't always just, you just jump in just because you see someone big buying or selling. For instance, someone bought here, and they're not. A lot of times, you don't know what they're doing either. You don't know if they're exiting positions. You don't know if they're hedging options. You don't need to know. You're never going to know, and I don't need to know. I just know this is an area of concentrating traders, of trades that fired off, and I know the patterns around those areas, right? So it's a good example of, at the time, buy ice came in, couldn't hold it, got smushed, and then someone big came in here and tried to sell it, didn't hold it. So more often than not, the big money is going to get their way because they're the big money. Like, for instance, if someone was, this at the time was 200 contracts, right? That's not a ton, but it's threshold, meaning enough for me to trade off of. Well, if the market comes down here and someone is big enough and they just keep putting sell ice in here, the market's going to eventually relent, right? So the big money is right more often than the wrong, but they're not right all the time. So the point is, well, you're like, well, how do you gauge? Well, the way I gauge it is if the market can push out an ATR, that is the current volatility of the market, which is very, very important to know. The two most important things, in my opinion, you can know about markets is volume and volatility, right? So from watching literally hundreds of thousands of these over the last 8 years, I have determined if the market is able to push the ATR out of the zone, that makes it either a bearish or bullish event. So this one, someone came in selling and it moved out of here immediately in ATR. So I knew this was a bullish event. Then I could take my strategies that call for longs. But the point I'm showing here is that paper's not always right, but you can see the reaction off this area. So knowing this information is just so important. Knowing the iceberg information, the volatility, and these VEX levels. I don't know of a better edge in markets that traders can trade off of. And I know there's traders out there that are profitable not using that stuff, but I feel like you're kind of getting lucky if you're profitable, right? Like if you had that information, you could be that much more profitable is what I'm saying. So anyway, back to your original question, this did break down. That's obvious, but you can see here what's going on. Now, all of a sudden you're getting these buying tails. This is an hourly chart. So tails are instant reaction, which are very, very important. That's where I draw some of these inflection zones. That's why I draw some of them. But it's giving you information. So this thing tried to break down. It did a little bit, but then now you're getting buying tail. So what you want to watch for now, if this retakes this balance area, I'm not saying today, over the next couple of days, it could be today. This thing's been so volatile. That's telling you heads up. The shorts had their chance. They didn't get their way. They barely got their way, and then watch out. And then on the flip side, if this market comes back and breaks these tails, then you're probably going to get that move that I was talking about. The height of that thing, you're probably going to get the major move. So, and then the next area down, that's another thing I look for too, as far as targets, like there's no structure in this market until way down here. So if this comes back and clears these tails, then again, the thesis, my guess would be short. So why does that matter? Because again, it's just a guess. I'm just guessing based on my experience what should happen. I use real-time volume to confirm that. So say this market came down, cleared these tails, and then I got a bearish event like I was just showing you, where it got the ATR out of the zone. Well, I would be trading double-sized shorts based on my thesis and the real-time volume event, which is the most important thing, right? So again, I have opinions all the time. Like here's a good example from crude today. I was coming in here ready to fire. That's not crude, that's yes. I was ready to fire short. Pull this chart here. I lost my chart as usual. It's here somewhere. 1 second. Hold on. This is a common occurrence where I lose my charts. But my point is, as far as structure, right? I had the same look here, and I was gung ho, ready to fire on shorts today based on my thesis. So this is a great example of using real time volume to confirm. So that was a balance area. That was a balance area. Some of the best trades in trading are when balance areas try to break out and they fail. So that was a failed balance breakout. It got back to the high volume node. That's what signals that for me. Then you had current balance breaking down to prior balance. That you can't get a more bearish look. And what did this market do? It held and did this. Well, if I'm just staring at this bar chart, I would have been short. I would have brought up my charts this morning. And I would have been firing on shorts, and I would have, taken it right down the throat. Did I go short? I didn't put on one short because why? Because the real-time value event proved bullish. So this is a perfect example of me having an idea what's supposed to happen. My guess, there was a stop run down here, instant dumb and dumber. That's what I call the stop run, dumb money puke. Turned bullish. Never went short. I actually went long some strategies. So that's a great example of waiting for the real-time volume that's happening right now to confirm your idea and or your area, right? So this could have been any area that you're looking for. And you're saying, okay, broke that area, I'm going short. Well, if you're using the iceberg information, you're like, I'm not going short. I'm actually going to look for longs because the real-time volume told me to do that. So really good example of both in gold where my thesis was short and the volume events confirmed there. And I went short this morning and not going short because the real-time volume events told me not to go short. So that's how I use the stuff. But to answer your question, is gold is in no man's land. Again, if it gets to the high volume node, I'd be wanting to go long that I showed, and if it breaks those tails, then I would want to go short. Bigger picture stuff, right? I'm a day trader. I'll trade if I get a bullish event and I want to go short. I'm taking longs with my rules.
And silver is basically follows side by side.
Yeah, well, there's another thing too. Silver, you don't hear volume events. This is another great example too. It doesn't matter what market you're trading. If you get these volume events, they're tradable no matter where. But I heard some stuff earlier. Here's another example. This one actually tagged the ATR exactly, but this was a dumb money puke at the lows, and it held. Not that I would have gone long off of there because of again, my rules are if it tagged the ATR, there was nothing for me to do on this one per se. But yeah, usually if you're hearing events in silver, that's telling you bigger moves are imminent in gold, right? So there was one stop run here and it worked. Or it held and then moved out of here. But it's just a good example of the dumb money puking out. It's not really initiative buying or selling most times. You can see right there, and it just drew it. This is my zone drawer tool that I have on the Bookmap Marketplace that draws these events on the heat map, and then it held and ripped. So, yeah, silver, it doesn't go side by side, but this was already looking, this was looking way worse than gold this morning.
Well, silver is a lot more volatile than gold, right?
Yeah. But that's the great thing too of this zone drawing tool. So again, a member of my trade room figured out a way to draw these iceberg events on the heat map. If you go to the Bookmap Marketplace, you can get this zone drawing tool. But this will tell you based on the zone size and the volatility. That's the great thing. This is one of the two main reasons why traders fail are not knowing where to get in and where they're wrong and over trading their account. So this is what's so great about the zone drawing tool. If you go in here, you could put your account, what your account size is. So it's the Scott Zones on the Bookmap Marketplace. Just Google Bookmap Marketplace. I'm risking 10%. You don't want to risk 10%, but I'm just doing this because I want to risk $425 per trade. So that's why I put 10% in here. But the point is, I know my exact risk. So if I'm going to take a trade in here, right? So that's what this yellow line is. So if I'm going to go long, I force the market to push the ATR out like we talked about, and I get long just outside of an ATR. Well, this position sizing is reflective of me going long here, and this is where I stop out. And this is the way I trade because this is the best way to avoid these algos, right? So you see the whipsawing. So I already know if I'm going long, I could put on 2 micros, right? Risking $500. So that's where traders, the biggest failure traders make is they're over trading their account. And you're gonna have a bad day. I promise you. Every trader is gonna have a bad day. And if you're over trading your account, all of a sudden you're gonna lose 20, 30, 40, 80% of your account, and you're going to wake up the next morning like, what the hell, what was I thinking? This helps you size. So this is the reversion sizing, and this is the position trade sizing. So I know right away, if I'm taking a trade in silver, I could put on 2 micros. If I'm wrong, then I lose $450 or whatever I had on there. So that's what this tells you. But yeah, it's more volatile, but it doesn't really matter per se as far as the sizing, because this all adjusts to the volatility and the size of the zone. So that's one of the great things, many great things about the zone drawing tool. If you can believe it, you guys, I didn't know you guys back then, but I used to draw these events by hand every time they fired off using Bookmap's 1978 drawing tool, which is a huge pain in the ass. So I used to have to come in here, hit edit, then I have to come back, hit horizontal line, draw the horizontal line, come back in here, get out of the drawing. I mean, you can imagine. So it's like in a fast moving market. So I used to do this by hand. Thank God I had a trader in my room figure out how to draw this or have it drawn automatically for me. But it's been a godsend. But anyway, that helps you with position sizing, and then we have the reversion trades. So you can see this one worked both ways. I only take it if it does it once, but it tagged the ATR right back to the zone. Tag the ATR right back to the zone. So that's another trade that I've been showing. But that's how I trade. I trade position trades looking for bigger moves, and I trade that ATR reversion trade. And most of my ATR reversion trades are off of the GEX levels. Fabio's GEX levels.
Nice. All right.
So in a nutshell, that's how I trade it. But the thing is, if you're trading your Mag 7 stacks, Fausto, you can be using this information in these futures markets to help you judge, right? So like you're watching Amazon and you want to short Amazon. Say you're watching maybe a liquidity level, you're waiting for it to get up there. It's not quite there, but then you see a stop run in NASDAQ. You're like, okay, well, it's go time. I want to short NASDAQ. I want to short Amazon. This event is bearish in NASDAQ. Okay, I'm going to put on my short on Amazon. So you can use the futures to help you judge your stock plays too, in my opinion.
I kind of do the same thing with people like want to use options. I said, you could use the book map to understand how to watch the stock and understand where those levels are in the options also.
Right.
So they follow side by side.
Right. You can see right where this market's heading too, right? So I'm still short a couple of these NASDAQ. I've been short from way up here. This is one of my targets. This is always one of my targets. It's resting liquidity. We just talked about this at the beginning of the webinar, right? It's like these guys will get their fill. Doesn't always mean the market just goes right here. It could, rip 400 points, but most of the time it will come back and these guys will get their fills because they're the big bunny and they push the market into their orders. And then a lot of times this is it, right? So this will be the end of the move. They get their fills. They go long. Again, this is just to guess what they're doing. You're never going to know, but I just know based on what I used to do, I would literally load up the order book just like this in the ES. I start selling. I'd see the reaction. No one's willing to buy. Then I would just step on the gas. I would sell, and my resting bid is in the book, just like this. I'd get my fill. I'd yank my orders, and then the market would turn around and go right back up. So that's the game, one of the games that are being played. So again, if you can't beat them, join them. Like everyone gets so mad about the algos. I used to get mad too. It knocked me out of the game. But if you can see what they're doing, which you can with Bookmap, that's the whole point. Now you can develop strategies to play the game with them. Right. So if you know this is what they do, you see this in the next 10 minutes get filled and it can't move lower, then it's probably go time to the upside. Right? So it's just using this information and then again, using your GEX levels too, that they're even better when you see this activity, this game at GEX levels, and the dealers are hedging there as well.
Scott, a lot of people that trade the market that they don't understand that they think they're smarter than everyone else. So they do their research, they do this and that. And like you said right there, I say it all the time, you're not going to beat them, just join them. I mean, traders, so some of the biggest traders live in my town. I mean, I live in New York, where I live, a lot of these traders, they commute back and forth. Well, they used to, going back and forth. You're not going to beat them, but you could, what's nice about it, instead of worrying about on the left of the chart, worry about the right of the chart, what I always say. And those orders are out there. They got orders to fill. They got millions of shares they got to get out of.
Right.
And that's where it's pretty much self-explanatory when you start seeing that. And then you look at a different perspective. I'm like, yeah, I'm not going to compete with these guys. It's like I'm looking at Amazon right now. You're talking about it. Amazon has this big order at 260 for about 300,000. Some people didn't know that even existed.
Right. That's what I'm saying. It's like people don't know what they don't know, right? It's like they may be making money on Amazon. Can you imagine how much more they would make if they had this information is what I'm saying, right? So it's just incredible. Like right now, here's a stop run right through the liquidity levels we just talked about, right? So this could be the end of this move. I'm not saying it is yet, right? But what I do, if this is in an important area, there's a volume event, just fired off, through the zone. If this holds and proves bullish, and I took some of these levels off, but if it tags the ATR above and there's my entry, that yellow line, then I'm going to go long. right? So and another thing I do, this is where traders make the biggest mistake traders make in all of trading, I believe, is the trailing of the stops, right? So how many traders this morning were short here and got stopped out trailing their stops, right? So the only time I trail my stops, and this is the first one since way up here, is based on something that's happening in the market. When you're trailing your stop, you're trying to impose your will on the market. The market doesn't care where you want to lock in profit. The market cares about volatility and volume. So now I've pieced out of this order as it came down here, and I still have one on of two different strategies. Now I'm trailing my stop based on something that happened in the market, because where I'll get out of my shorts is where I'll turn around and get long. So that is the number one thing out of any trading error, why traders don't make it, is the trailing of the stops in random areas, or just because based on their P&L, right? Again, the market doesn't care about your P&L. The market cares about volume and volatility. So if this pops out of here right now, I'm out of my shorts. I could even get out of some right here. I only have one left because it's struggling at this resting liquidity. Then what I do here is, hey, is this an area? So let me check my charts and see. This is an area to go long, just like I went short above. Let's see. Of course, I don't have my chart. Here it is. See if this is an ISNY zone. So nothing for me for inflation. So I have different strategies, different accounts based on different strategies. There's nothing here for an ISNY zone. I could have drawn this today because you see here. So this is actually an ISNY zone, because this is fluid. This is what happened here this morning. So this is where the market came down this morning and put in a buying tail and directional conviction. So I should have a zone drawn here, and this is exactly how I do it every morning. I'll come in here and I'll say, okay, what happened yesterday? And I'll draw this zone. So this actually is an inflection zone, self-made right now because of what happened this morning. So I could take a long here. I'm not just jumping in along. I need to see this push out of here in ATR, which is happening. So now if this tags this yellow line, which is my entry point, let me get my ATR on this. I don't know why it's not showing on the chart here. But anyway, I'll stop out of my shorts and go long here at 7. You can see right there. If I hover over it, you see in the bottom left, long aggressive, 25,707. So I'm going to hop out of my short and go long based on my areas and looking for the volume event. So I didn't do anything with this thing. Now this is where I'm trailing my stop to. So again, I'm showing you guys, viewers, where traders make the mistakes and why they don't make it in trading, right? And having this information will change your trading, in my opinion. So that's all I got here. There you go. So this value, I don't know why I'm not showing the ATR here. Why not? Let's see if I can get it back up here. I took it off earlier. Now it's not coming back. So this just hit the ATR. You should see a blue line. That's the ATR. You see it on all these other charts. But now I'm about to get stopped out and go long based on something that happened. So I could have been out. If I had more than one on, I would have been. This is one of my areas. What did I just get done saying too? Right? It's like clockwork. Market comes down. These jackasses get their fill, and then it turns around and goes the other way. Right? So again, if you can't beat them, join them.
Yep.
So what's so funny about all this is I used to be this guy. I used to be the market manipulator, right? And back then, spoofing was legal. All this stuff that's illegal now was legal. So I used to play the game all day long where this was me. So it doesn't feel good that it's being turned around on me these days as a retail trader, not with all this big money backing me. But back in the day, it was funny. I tell the story all the time. Like I was hated on the street. Like the CME, I heard the pick guys hated me because that's right when the stuff started going to the screens. That I even had guys in my own firm that hated my guts. There was one time I was walking through my office to use the restroom. I walked past this guy's office and he's like, "F you, Pulsini, you manipulating mother, blah, blah." I put my head in his office. I'm like, "Did I do something wrong to you?" He's like, "Oh, I thought that was you in the market. Sorry." So the point is, this used to be me. This is why I know the games. Right? It doesn't feel this is why I call them jackasses, because now I don't like it being done against me. But again, you can see what they're doing. If you can't beat them, join them.
Yep. That's changed.
I like it.
Now you just got the technology better. Like you said, when you're on my podcast, if you had this back then, you'd been 10 times better trader.
Oh my God. I can't imagine what I would have made.
Yeah.
I mean, I made at the, my heyday. And again, this isn't glory days. I just like it feels good to, remember these days that in a 3-year period, I made $15 million for me and my firm, right? Where we split it and all that. I can't even imagine what I could have done if I had GEX levels and I knew of this, how to read the liquidity and the iceberg amounts, because they were using icebergs back then too.
Yeah.
And it's a little scary what I could have done, but coulda, woulda, shoulda, but I have it now. So
You're still here.
yeah, I'm still here. Exactly. They try to knock me out of the game. And back to the mafia reference, because there's all Italians on this webinar. Once I thought I was out, they pulled me back in.
Sucked me back in.
Little Godfather quote for you.
All right. I think this was awesome, guys, and thank you, Scott, for sharing this. And we were live, so we saw this happening live, so which is awesome. And thank you, Fausto, for being with us. Really enjoyed having you, and hopefully we can have you back another time. So let us know if you have any final things. But really excited to see you guys soon again.
Yeah, I appreciate it, and really appreciate your levels, Fausto. They're game changing. So hopefully traders can see the power in these things and the stop iceberg events. It's all here for you guys. So this is the way you can compete.
Yeah, but listen,
your insight too on the stocks.
When you hear from market makers, what we've been doing and how we used to trade it. I mean, listen, there's a lot of people want to get into this business, but they don't understand. There's a lot of mentors out there. There's a lot everyone thinks they're gurus out there. There's a lot of influencers out there. But when us market makers, when we see something that really does work, that's why we're using these platforms the way it needs to be done, and that's why we're still in the game. You know what I mean? So, and if you want to survive in this market, you got to spend a little money, and you just got to surround yourself with people who know what they're doing. And you got to try a little bit of everyone's stuff. That's why I always kind of recommend somebody. They might not like your Scott. They might not like me. And they might not like you, Fabio. But, you got to find somebody. But don't try to go out there and read out of a book. It's not going to work.
Yeah. Yeah. You're never going to, I say this all the time, you never want to blindly follow a trader in his trades, right? You want to learn how to fish for yourself.
Yeah.
But what you do is you take, something that you thought was a good idea from me, and something you thought was a good idea from Fausto, and then something from Fabio, and then you build your own plan, right? So I give step by step on how I do it. And I love when my traders get to the point where they're adding their own things in, right? Don't do it right away until you know what you're doing. But you want to add your own stuff in, and then it's your own, right? But yeah, you never want to follow any trader blindly.
Absolutely. All right, guys.
Thanks for having me.
And see you guys soon. Have a great day.
Thanks. Appreciate it, Fabio. Thanks for having me.
Bye-bye.